The key difference with the CBDC is the central bank will have absolute power on the rules and regulations. Those words were uttered by Augustine Carstens, the leader of the Bank of International Settlement. Love it or hate it, CBDCs are just around the corner. Every continent on planet Earth, well, excluding the polar bear inhabited continent of Antarctica, of course, is either researching or currently piloting a CBDC program, with a couple countries having already launched. In this quick video, you will learn about what a CBDC is and the pros and cons. Yes, there are benefits to having a CBDC, although the cons outweigh them drastically. Central bank digital currencies take the power away from the traditional banking system and puts them into the hands of a country's central bank, hence the name. So instead of strolling into Chase or Wells Fargo to open up an account, you would apply for a similar account directly with your central bank, which in the United States would be the Federal Reserve. This in turn puts all oversight and control over your CBDC money into the hands of the people you trust the most, the government. I'm kidding, of course. In theory, there are genuine benefits to having a CBDC, which include eradication of money laundering, no more tax evasion, heightened security, efficiency, and targeted monetary maneuvering. The most intriguing benefit, in my opinion, is the target maneuvering of monetary policy. Let me paint a scenario for you. A hurricane hits cities in Southern America, devastating homes, businesses, and infrastructure. The Federal Reserve can step in and provide targeted support for these cities via lowering borrowing costs for those specific regions, opening up lines of credit for those directly affected, even airdropping money directly to the people who had their homes or businesses destroyed. No more fraudulent loans to individuals who don't qualify, no more waiting weeks to receive help, and no more hoops to jump through. Your house was in direct path of the hurricane? Here's $10,000 to help you get back on your feet. Here's a $20,000 line of credit with 0% interest to help you rebuild your home. And there's no credit risk to the entity issuing the help because, well, they're the government, duh. Like I mentioned in the beginning of this video, the cons far outweigh the pros of a CBDC. The two greatest cons are loss of privacy and complete government control. Having an account at the central bank means the government knows exactly how, when, and where you spend your money. You donated $2,500 to a business that is not ESG compliant, they have the power to restrict access to your funds. You gotta send money to a family member in Russia to buy medicine because they are dying. Your funds can be frozen. You bought $100 worth of Bitcoin with your CBDC account. You may have to pay a penalty or have your assets frozen. These are just some minute examples of just how much insight and control they will have over your financial privacy. The greatest threat to society a CBDC imposes is handing over complete monetary control over to the government and central banks. In today's system, the central bank can conduct quantitative easing by injecting capital into the markets or send stimulus checks to people's bank accounts via the Treasury Department. In the current scenario, citizens can use the money however they please, whether it's boosting up their retirement, paying off debt, or buying that new TV. But if the same capital injection and stimulus payments were implemented through a CBDC, the government can put stipulations and requirements. You have 4 weeks to spend the money. If you don't, that balance will disappear. Oh, and by the way, you can't use the money to pay off your debt or save it. You have to spend it on goods and services because we have to stimulate the economy, of course. This might sound crazy, but it is literally happening in other countries right now. England is a prime example when Bank of England Deputy Governor John Cunliffe stated the following, quote, "We propose a limit of between £10,000 and £20,000 per individual. A limit of £10,000 would mean that 3/4 of people could receive their pay in digital pounds. The people CBDCs are going to harm the most are the lower and middle class, the people who receive government help via welfare or Medicare, the people that receive tax refunds every year. All that money will be paid through a CBDC, and the rest is history. What is dead may never die. Slavery died hundreds of years ago, but a modern form of slavery is upon us, and it's called a CBDC.